If you were denied for a VA home loan, don't automatically assume that the Department of Veterans Affairs rejected you or that homeownership is out of reach. In many cases, the decision may have been based on that lender's particular credit score requirement, an automated underwriting result, or internal lending guidelines. Another lender may review the same borrower differently. That does not mean every denied loan can be approved, but it does mean you should understand exactly why the loan was denied before giving up. I'm Vance Scott, a VA home loan educator with Approved Mortgage Source. In this video, I'll explain what a VA loan second look means, how manual underwriting works, and why having an experienced VA professional assemble the file correctly can be so important. One of the most important questions is this: did the Department of Veterans Affairs deny the loan, or did a private lender decide not to approve it? VA-backed home loans are provided by private mortgage lenders. The VA guarantees a portion of the loan, but the lender still decides whether the borrower meets its underwriting requirements. The VA itself does not establish a universal minimum credit score. Individual lenders may establish their own minimum scores and additional requirements. These are commonly called lender overlays. Therefore, being denied because one lender requires a higher credit score does not necessarily mean every VA lender will reach the same decision. Most mortgage applications are first evaluated through an automated underwriting system. The system reviews information such as your income, debts, credit history, available assets, and proposed mortgage payment. It then produces an underwriting recommendation. An automated approval can make the process easier. But when the system does not produce an approval recommendation, that does not always mean the borrower is permanently disqualified. Depending on the facts and the lender's programs, the application may be eligible for manual underwriting. Manual underwriting means that a qualified human underwriter examines the complete loan file instead of relying only on the automated result. Not every lender offers the same manual underwriting options, and a manual review is never a guaranteed approval. Second Look is not a special VA government program. It is a practical term for having an experienced VA lender review a loan that another lender declined or could not complete. The reviewing lender should start with the actual reason for the original decision, not simply submit the same information again and hope for a different answer. Was the problem a lender's credit score overlay? Was income calculated correctly? Were military allowances, disability income, overtime, bonuses, or other eligible income documented properly? Was a debt included that may have been paid off, duplicated, or assigned to someone else? Was residual income calculated correctly? Did the previous lender offer manual underwriting? Did the property itself create the problem? Here is a recent real-world example from my own work. I prepared a manual underwrite file as a second look after it had not been approved previously. In my professional opinion, a major issue was that the original file had not been assembled with the documentation a manual underwriter needed. There was no completed verification of rent. There also was not a proper verification of employment establishing the borrower's employment terms. The borrower regularly worked 32 hours each week, and the employer considered that schedule full-time. But without written information from the employer confirming that 32 hours was the company's full-time standard, the underwriter evaluated the earnings as variable income. That distinction can materially change how qualifying income is analyzed. It also demonstrates why simply saying that someone is full-time is not enough. The file must contain documentation supporting how the borrower is employed, how the income is earned, and whether it is stable and likely to continue. The verification of rent can also be important because it gives the underwriter documented evidence of how the borrower has handled a housing obligation. This does not mean that a verification of rent or employment guarantees approval. Every file must stand on its own facts, but it demonstrates why an experienced VA professional must anticipate the underwriter's questions and submit a complete, accurate, well-organized file. A meaningful second look identifies the specific obstacle and determines whether there is a legitimate, compliant way to address it. A manual underwriter examines the borrower's entire financial picture. That normally includes your certificate of eligibility and available entitlement, your credit history and recent payment patterns, the stability and likelihood of continuation of your income, your monthly obligations and proposed housing payment, your available assets and reserves, your residual income after major monthly obligations, your previous housing payment history, and the property, appraisal, occupancy, and loan purpose. The VA requires borrowers to meet both VA and lender standards for credit, income, and occupancy. Having a certificate of eligibility proves benefit eligibility, but it does not by itself guarantee loan approval. VA underwriting is different from many other mortgage programs because residual income is extremely important. Residual income is the money remaining for normal family living expenses after major monthly obligations have been considered. Debt to income ratio still matters, but VA guidance describes it as secondary to residual income. A debt to income ratio above 41% calls for closer scrutiny under VA guidance, but it should not automatically cause approval or rejection by itself. The underwriter must evaluate it with residual income, credit history, and the rest of the file. That is one reason an experienced manual review can matter. A single ratio or credit score may not tell the borrower's entire financial story. An underwriter may also consider legitimate strengths in the application. Examples may include a strong record of paying rent or a mortgage on time, stable long-term employment, meaningful savings or financial reserves after closing, limited consumer debt, a conservative increase from the current housing payment to the proposed payment, residual income that comfortably exceeds the applicable guideline, and a reasonable explanation for an isolated credit problem, supported by documentation. These factors cannot erase serious unresolved problems. However, they can help an underwriter understand whether the borrower presents an acceptable overall credit risk. Here are several common reasons a VA loan may be denied or delayed. First, the lender's minimum credit score requirement. Another lender may have a different credit score policy, but lower scores often require a more detailed review. Second, recent late payments or serious derogatory credit. The underwriter will examine when the problem occurred, why it happened, whether it has been resolved, and how credit has been handled since then. Third, insufficient or unstable qualifying income. Earning money and having qualifying mortgage income are not always the same thing. The income generally must be documented, stable, and likely to continue. Fourth, excessive obligations or insufficient residual income. Reducing debts, correcting calculation errors, or selecting a more affordable payment may sometimes help. Fifth, eligibility or entitlement questions. The lender may need an updated certificate of eligibility or additional documentation. Sixth, a property or appraisal problem. Manual underwriting cannot make an ineligible property acceptable or force an appraised value to increase. If you have been denied, ask the lender for the specific reasons in writing. Gather your denial or adverse action notice, your most recent mortgage credit report, if available, recent pay statements and W-2 forms, tax returns if you are self-employed or if they are required for your income type, bank statements and asset documentation, your certificate of eligibility, any written explanation and supporting documents concerning recent credit problems, and your purchase contract and appraisal if a property is already involved. Do not alter, omit, or misrepresent information. A proper second look must be based on complete and accurate facts. A second look is valuable, but it is not magic. A file may still be ineligible because of insufficient qualifying income, unresolved credit obligations, unacceptable payment history, lack of required occupancy, unavailable entitlement, property problems, or another material underwriting concern. Sometimes the correct answer is not immediate approval. It may be a documented plan to improve credit, reduce debt, establish payment history, build reserves, or wait until income can be properly documented. An honest plan is better than a false promise. If another lender declined your VA loan, or if an automated underwriting system did not approve it, contact Approved Mortgage Source for a second look. We will review the available information, explain the issue we identify, and determine whether another compliant VA underwriting path may be available. Call or text me, Vance Scott, at 386-661-8000, or visit approvefl.com. Subscribe to Vance Scott, VA Home Loan Educator, for straightforward information about VA eligibility, credit, residual income, manual underwriting, and the home loan process. A previous denial may be the final answer, but it may also be the beginning of a better informed review. This video provides general educational information and is not a commitment to lend or a guarantee of approval. Loan approval remains subject to VA eligibility, credit, income, assets, property requirements, lender guidelines, and underwriting. Approved Mortgage Source is not affiliated with or endorsed by the United States Department of Veterans Affairs.